Hi, this is Raghee Horner with your TradeForexFutures.com free nightly video, and we're going to talk about the Euro US dollar and the swing short that we had set up on the 30-minute time frame and how we adapted to when the bullish momentum came into the market. So we have to kind of go back in time here to discuss why and how we were swing shorting the market to begin with. So we're looking at points at which the market rallied up into the dynamic resistance of the 34 EMA wave. And the tactic that worked all morning was to simply short the bounces up into the area between the 20-period simple and the 34-period EMA on the low. That's our swing short zone within the context of a 4 to 6 o'clock angle. One of the things that we had alerted these bounces were occurring within was the fact that there was increased volatility, which you could see by this kind of shaky or lumpy 34 EMA wave. So that kind of changes the aggressive level at which we will manage the trades, because in a more volatile environment, the follow through could be suspect. We were not going to expect a push to lower lows, and that changes the way we manage the trade, and that's a very important distinction to make. So eventually, when it comes to swing trading, when it comes to any kind of trend following trading, at some point the trend is going to end, and your last trade, whether it be your first, 7th, or 12th, at some point you're going to have a losing trade. In this case, this was our third short entry, and the bullish momentum carried us higher through not only the cheated in stop loss resistance, but also the point of validity stop loss resistance, and that's exactly where prices began to accelerate. And when we see acceleration through our stop loss levels, that tells us, number one, that's exactly where those stop losses were supposed to be, because when bullish momentum and bullish sentiment really begin to gel, we want to get the heck out of its way, and that's what we wanted to do here. So as the prices were, as Euro US dollar prices were breaking up higher through the cheated in stop, through 3080, and then through the 3100 major psych level, we have one of two choices. One, we obviously want to get flat the swing short. It's no longer valid. But the second option is to go ahead and utilize something that I call my wave reversal entry. And that's when I use a 20-period simple, and I look to enter long when prices have broken the 34-period EMA on the high, in this case, accompanied with a positive CCI. That allowed us to shift gears. That allowed us to recognize the swing short environment was no longer valid, and that a different tactic has to be applied if we wanted to even apply it, and that was this reversal tactic using one, prices breaking through our trigger, the 34 EMA high, with the CCI, positive CCI, at least a CCI of 100 or greater, confirming the bullish momentum. That's how we adapted to really shifting gears. Very important point, and a point that was made very clearly and very quickly today on the Euro US dollar. Looking to capitalize on the weakness when it's available and apparent, and then when it's no longer valid, shifting those gears.